Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, February 14th, 2023. Before I jump into the charts, just want to encourage you to please click like as usual. It does help us out a great deal each and every time. Also, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification every time new content has been uploaded. That includes the daily Tesla and daily Apple reports. And please share the content, if you would, with friends and colleagues. So, big picture, work our way into the day. Let me start with the fact that about a month and a half ago, we bottomed out. That would have been in early January at this targeted channel structure, presently 83.54 to 95.24. On the way up, we were anticipating the possibility of putting a high out in what is now in the 153.15 to 161.26 region, whereby following a test of this former channel bottom, we could fall back to new lows or back to this channel structure within a month or two of doing so. We had a positive earnings. We settled above this channel structure, presently 153.15 to 161.26, and that set off a 2 to 3 month buy signal to the 252.77 channel top. So we are still anticipating the 252.77 channel top over the next several months, holding above 153.15 to 161.26. These are a bit of a moving target because I want to see them correlate with other developments on the nearer term chart, namely rising speed lines. This is actually a good image to show right now. So I'm going to back up a little bit. A couple days ago, we had a short-term sell signal below a short-term channel bottom. This is presently today at 206.80. I don't know if we'll see 206.80 today. I do have it still set up as a session containment level, able to contain daily buying pressures. I will say that if we push through 199.63, 206.80 is indicated on an intraday basis. But we've got these intraday levels, 199.63 upside, 192.52 downside, both of which can firmly contain intraday activity, but also know that the settlement below the 206.80 formation a couple of days ago, that was Friday, did set the market up for a test of this more meaningful support area, presently 185.99 to 186.40. I've rounded down to 185.99. You can see it here. I'm calling it a 4-star support level because of the buy signal that occurred a few weeks ago, the secondary buy signal, you might say, above this 153.78 to 162.18 area, and the fact that we're anticipating not only 221.25 over the next few weeks ahead, but also, as I said earlier, that 252.77 long-term channel top, I'm going to consider this to be a decent pullback support at 185.99 that can contain weekly selling pressures and quite possibly selling as we move into March trade. We would need to get up and out of this area pretty quickly. It is rising at a pretty steep pace, so a bounce out of here is needed to keep this idea intact. But the green arrow represents the 2 to 3 week upside time frame. The red arrow, the 2 to 3 week downside time frame. So holding above 185.99, that 221.25 longer term Fibonacci level that I've showed a lot over the last few weeks. That is a 3/8 upside pullback from A, the all-time high from a year and some change, November of 21, I believe, against B, the January low. We pushed it through 208.24 last week, did not close above it. That is a 50% upside retracement off the August high. So this is a zone that I've been mentioning may well contain not only weekly but possibly monthly buying pressures. And, holding above 185.99 will keep this area in reach, I'm going to say again. Now, I'm really pointing to 221.25. Let me continue with the upside today, that if we push above 199.63, 206.80, this former channel bottom in reach, where we can place a daily high, and it is very close now to that 208.24, 50% retracement. So I have them bunched here together. This is well suited not only for day traders, but perhaps 3 to 5 day swing traders. We could top out here not only for the day, but even fall off from here into, Wednesday, Thursday-ish, back into the mid 180s and climbing. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Closing today above 208.24, and I think that is a long shot. But if over the next few days we do close above 208.24, we could by Friday's close then actually test that 221.25 long-term Fibonacci level, which can contain buying through next week, possibly into March trade. And if we were to close above 221.25, the longer term objective, presently at 252.77, is just a few weeks away, where we could actually top out, I'm going to say, through the second quarter. This is a significant test long term, and we could fall off from here through the second quarter. And we'll be talking a lot about that if we approach it in the coming weeks. Now let's continue with the downside today. That if we happen to break, well, let's go with the 192.52. That can contain intraday selling. If we break 192.52, 185.99 is likely, where once again we can bottom out for the week, quite possibly into March trade. Now, if we do close today below 185.99, that sets up a 2 to 3 week sell signal. It'd probably take about 2 weeks at the most, I think, to reach what is a 144.17 rising 2/3 speed line. But I don't think we're going to break into the 140s. I think by that point in time, things are lining up nicely. So if we were to close today, for instance, below 185.99, this 144.17 is by next week pushing into the 150s anyway, that 153.78 to 162.18 area, which you can see it on the daily chart. When we broke to it back in November, December, it held nicely, and then we violated it, sold off to that long-term channel bottom that I showed here earlier, and then on the way back up, this is it on the weekly chart, it did not hold to the upside. You can see that better on the daily chart. It did not hold to the upside, but you can see that once we got through it, it actually held nicely before launching about a 1.5, 2 week rally into this 208.24 to 221.25 area. Let me continue just a little bit more with this downside scenario that if we close below 185.99, let me actually mention, and I don't expect to see this today, but if we do break 185.99 today, 180.68 is in reach, and closing below 185.99, 171.14 is likely within a day or two. This 153.78 to 162.18 area by the end of next week, where by that point this rising 2/3 speed line is converging with this area. With respect to speed line analysis, if you close below the rising 1/3 speed line, the rising 2/3 speed line becomes your next overall objective. And so 144.17 rising gradually, then expected, where it would converge over the next week with 153.78 to 162.18, where we could actually bottom out through March and turn back up again. And finally, with respect to the downside, it would be a settlement below this band of long-term channel support that would once again, and I even show that here, put this 83.54 to 92.24 region in reach again within a month or two of closing back below this zone. But I'm not expecting it. I'm just giving you the heads up as to what I would expect if we did close below 153.15. Until then, this is our 2 to 3 month dynamic. This area in the mid 150s, lower 150s, lower 160s, able to absorb selling through March, and once again above which 252.77 remains a 2 to 3 month objective. I'm trying to think if there's anything else that needs to be fleshed out here, and I don't really think so. I could take a look at this as kind of the 3 to 5 day. This is a repeat from Monday's, and I don't think there's really anything else to add. I suppose I could talk options a little bit, but I think that if we fall into the mid 180s today, you could look for 220 out of the money calls, or even the 250 out of the money calls that don't expire for at least 6 months. And inversely, if we close today below 185.99, you could look for 150, 152 out of the money puts that don't expire for at least several weeks. And I think that those are the option plays right now in terms of the 2 to 3, 3 to 5 week time horizons. I don't think there's anything else to say. I'm just going to leave it at that. Please click like if you would, and subscribe. I appreciate you watching. Your likes help a great deal. I'll be back tomorrow, of course, with Wednesday's Daily Tesla Report.